Welcome, everyone. Thank you for joining me today for this special presentation on key financial data for 2025. Today, we are going to cover the tax rates, thresholds, limitations, exemptions, and more for this year. Before we move into the presentation, let me tell you a little bit about myself and my company. My name is Chris Foster, and I, along with my business partner, John Keeble, welcome you to our monthly webinar series on financial planning. Each month, we focus on a different essential topic to educate you on your finances and achieving your financial goals. Our series includes webinars, insightful articles, practical handouts, and Full Cup's monthly newsletter. Whether you're just starting your financial journey or looking to enhance your existing plan, our resources are designed to provide you with the knowledge and tools you need for effective financial management. Be sure to visit our website, fullcupfinancial.com, for the previous month's series. John and I are both financial advisors and owners of Full Cup Financial in Athens, Georgia. Our mission is rooted in good stewardship, and we believe that education is crucial to financial success. We encourage you to reach out to us with any questions or for more detailed guidance on any month's topic. We are here to help you navigate your financial journey with personalized advice and support. Disclaimer: this video is created for educational purposes only. Always consult with your financial, tax, or legal advisor for a comprehensive review of your situation. Neither Cetera Advisors nor any of its representatives may give legal or tax advice. So now that you know a little bit about me and Full Cup Financial, let's talk about some 2025 key financial data updates. The big news is the tax brackets and tax rates for 2025. There are still 7 tax brackets in 2025. Let's run through them quickly. Here are the tax brackets and rates for single filers in 2025. The lowest tax bracket you can see goes up to $11,925. Single filers with a taxable income over $626,350 are in the top 37% tax rate. Here are the tax brackets and rates for those married filing joint and surviving spouses in 2025. The lowest tax bracket you can see goes up to $23,820. Filers with a taxable income over $751,600 are in the top 37% tax rate. Here are the tax brackets and rates for those filing as head of household. The lowest tax bracket you can see goes up to $17,000. Filers with a taxable income over $626,350 are in the top 37% tax rate. Here are the tax brackets and rates for those married filing separately. The lowest tax bracket you can see goes up to $11,925. Filers with a taxable income over $375,800 are in the top 37% tax rate. For most married couples, it is usually more favorable to file joint, but there are some circumstances where it might make sense to file separately. This is something I can discuss with you in a meeting. And lastly, here are the rates for estates and trusts this year. You can see here that the top 37% marginal tax rate is kicking in for estates and trusts over $15,200. Now let's talk about the standard deduction for this year. The standard deduction, shown here, increases slightly from $29,200 in 2024 to $30,000 in 2025 for married filing jointly filers, from $14,600 to $15,000 for single and married filing separately filers, and from $21,900 to $22,500 for head of household filers. Remember that the ability to take personal exemptions has been eliminated, a change which to some degree tempers the benefit of the higher standard deduction. The additional standard deduction amounts went up slightly from 2024. Thus, people who are blind or over age 65 receive an extra deduction of $1,600 each in 2025, up from $1,550 in 2024. The additional deduction also increases from $1,950 in 2024 to $2,000 in 2025 for taxpayers who are blind or over 65, as well as unmarried and not a surviving spouse. For 2025, the child tax credit is $2,000 per child, $1,700 refundable for those with income under $400,000, filing joint, and $200,000 for all others. Now let's talk about the capital gains and qualified dividends for this year. Tax rates on long-term capital gains and qualified dividends generally are unchanged at 0%, 15%, and 20%, but the brackets for the rates will change. For 2025, the 15% rate applies to capital gains or dividends that push taxable income above $96,700 for joint returns and surviving spouses, $64,750 for heads of household, $48,350 for single and married filing separately taxpayers, and $3,250 for estates and trusts. The 20% rate applies to long-term capital gains or qualified dividends that propel taxable income past $600,050 for joint filers and surviving spouses, $566,700 for heads of household, $533,400 for single filers, $300,000 for married filing separately filers, and $15,900 for estates and trusts. Remember that exceptions also apply for art, collectibles, and Section 1250 gains related to depreciation. Now we'll cover some additional taxes that may be relevant to you. The alternative minimum tax has been adjusted for inflation and will continue to affect fewer and fewer taxpayers under the TCJA. In 2025, the exemption amounts rise to $137,000 for married filing jointly taxpayers, up from $133,300 in 2024. $88,100 for single filers, up from $85,700 in 2024, and $68,500 for filers who are married filing separately, up from $66,650 in 2024. The exemption amount for estates and trusts rises to $30,700 from $29,900 in 2024. Some high-income taxpayers owe the net investment income tax, NIIT, of 3.8%, which is levied on the lesser of net investment income, or modified adjusted gross income, MAGI, over $200,000 for single or $250,000 for married filing jointly. These amounts remain unchanged from 2024. Net investment income includes taxable interest, ordinary dividends, capital gains, and other income categories, and some expenses can be subtracted. What about gifting rates and the estate tax this year? Estate, gift, and GST exclusions rise from $13,610,000 in 2024 to $13,990,000 in 2025. The top federal estate tax rate remains 40%. The IRS has issued final regulations that there will be no clawback at sunset. The value of gifts one person can give another without reporting it on a gift tax return rises from $18,000 in 2024 to $19,000 in 2025. Unlimited payments for tuition and medical expenses are permitted. Let's talk about education credits, deductions, and distribution. Just as in past years, in 2025, taxpayers with qualified education expenses can reduce their tax bill by up to $2,500, of which $1,000 is refundable. Thanks to the AOTC, if their modified adjusted gross income doesn't exceed $80,000, $160,000 for married filing jointly filers. At that income level, the credit starts to phase out. This non-refundable credit is worth up to $2,000. In 2025, the credit starts to phase out for taxpayers with modified adjusted gross income of $80,000, $160,000 for married filing jointly filers. The Lifetime Learning Credit offers two main advantages over the American Opportunity Tax Credit. The LLC can be claimed for an unlimited number of tax years. The AOTC is limited to 4 tax years per eligible student, and the student doesn't need to be pursuing a degree. The AOTC requires the student to be pursuing a degree or other credential. Parents and others who want to save for a student's education costs can contribute a maximum of $2,000 to these accounts. Contributions are after tax, like a Roth IRA, and then withdraw the contributions and investment earnings tax-free if the funds are used to pay qualified education expenses. The maximum contribution stays the same in 2025 as in 2024 and 2023 and starts to phase out for taxpayers with modified adjusted gross income of $95,000, $190,000 for married filing jointly filers. As in 2024, the law continues to allow up to $10,000 a year in 529 plan distributions to pay for qualified private school K-12 education costs, excluding homeschooling, a provision which might encourage taxpayers to focus on 529 plans rather than Coverdell's. Previously, for a 529 distribution to be qualified, it had to be used for higher education costs, whereas K-12 expenses have been a qualified expense for Coverdell plans. The law also allows rollovers from 529 plans to ABLE accounts for disabled beneficiaries until December 31st, 2025. But make sure to check with the specific state, because some states are decoupling from the federal and not treating the 529 plan withdrawal for K-12 expenses as a qualified distribution, and they will also have specific rules in connection with ABLE account rollovers. Retirement plans continue to remain in the news and are the subject of much debate. The total amount that employers and employees combined can contribute to a 401k or similar defined contribution plan rises to $70,000 in 2025, up from $69,000 in 2024. The limit on how much compensation can be counted under a qualified plan rose to $350,000 from $345,000. Meanwhile, the basic annual benefit limit for defined benefit increased to $280,000. Most notably, there is now an extra catch-up contribution for individuals aged 60 to 63 of $11,250. In 2025, taxpayers who save for retirement in a traditional IRA or Roth IRA are limited to a $7,000 contribution, plus a $1,000 catch-up for those 50 and older. However, there is no age limit on your ability to contribute to an IRA as long as you have earned income. Taxpayers who aren't participating in a retirement plan at work generally can fully deduct their contributions to a traditional IRA. However, income thresholds limit the deductibility of such contributions for taxpayers who are participating in a workplace plan, or if their spouse participates. You can see that in the table on this slide. Next, let's cover some major health-related numbers for 2025. We'll discuss HSAs, long-term care premiums, and Medicare numbers for the year. Health savings accounts offer the rare tax trifecta. Contributions are made pre-tax, enjoy tax-free investment returns, and money comes out tax-free if used for qualified medical expenses. The downside is that such accounts currently are available only to those who are enrolled in a high-deductible health plan, which can pose steep upfront costs. In 2025, the minimum annual deductible for a qualifying health plan is $1,650 for an individual plan and $3,500 for family coverage. The maximum deductible contribution to an HSA in 2025 is $4,300 for individuals. For family coverage, the maximum deductible contribution is $8,550, and there is a $1,000 catch-up contribution available for age 55 and older. Taxpayers who are paying for long-term care generally can deduct a portion of their premiums as a qualified medical expense. The deductible varies based on the taxpayer's age and is subject to the 10% floor for medical expenses. The standard premium amount in 2025 is $185, though some Part B beneficiaries pay less due to the hold harmless provision that protects them if Social Security benefits rise slower than Medicare premiums. The people who pay the higher figure include those signing up for Medicare Part B for the first time, those who don't receive Social Security benefits, those who don't have their Part B benefits automatically deducted from their Social Security benefits, and others. Meanwhile, some higher income beneficiaries will pay more than the standard premium, as shown here. Remember that Medicare premiums apply to income from 2 years prior, and that decisions made today will have a future impact. There are key Social Security figures pre-retirees and retirees should be aware of. The Social Security estimated maximum monthly benefit is $4,018 in 2025, up from $3,822 in 2024. The maximum taxable wage base in 2025 is $176,100, up from 2023's $168,600. The tax rate remains the same, 6.2% each for the employer and employee, 12.4% for self-employed people. The so-called full or normal retirement age for claiming unreduced Social Security benefits is 66 for people who were born from 1943 through 1954. For those born after 1954 but before 1960, full retirement age is 66 plus some number of months, depending on the birth year. For those born in 1960 or later, full retirement age is 67. Sometimes retirees are surprised to find their Social Security benefits are taxed. This slide shows the income thresholds at which benefits start to be taxed. To figure their bill, beneficiaries must compute their provisional income, which is also known as combined income. Combined income equals income plus non-taxable interest plus half of Social Security benefits. Our tax code has evolved from a two-page form in 1913 to over 75,000 pages of complex rules that are constantly changing. We covered a lot today. This reference card can help you keep track of the key numbers that impact your financial life. You can find the 2025 Key Financial Data Card on our website. Thank you so much for your time. If you have any follow-up questions, please do not hesitate to reach out to me directly. Our office number and my email are on the slide. As always, we appreciate your time and hope we answered some questions for you. Remember, I am always available to meet with you on any of the topics we discussed here today, and I'd be happy to share a copy of the Key Financial Data Card with any friends or family who could find it useful. Just let us know. Tune in next month for the next video in our financial planning webinar series. Thank you.